My dear students, today we will be discussing about the concept grossing up. Grossing up means to increase a net amount to include deductions such as taxes that would be incurred by the receiver. It means it is a process of finding the full amount promised to them without deductions for tax. Grossing up is nothing but get an actual amount of income before deducting TDS from the amount. Formula for grossing up is net amount received into 100 divided by 100 minus rate of TDS. TDS stands for tax deducted at the source. It was introduced to collect tax at the source from where an individual's income is generated. The government uses TDS as a tool to collect tax in order to minimize tax evasion by taxing the income at the time it is generated rather than at a later date. TDS is applicable on various incomes such as salaries, interest received, commission received, dividend, etc. For the assessment year 2020-21, main TDS rates are interest on securities 10%, interest other than interest on securities 10%, winnings from lottery, crossword puzzles, card games, horse races, etc. 30%. Grossing up of interest on securities. While determining the income from interest on securities under the head income from other sources, gross amount of interest must be included in assessee's total income. Not the actual amount received or net interest, we have to include gross amount of interest. What is given? That is the amount received. That is called net interest. That has to be grossed up to calculate taxable amount of assessee. For example, if Mr. X get rupees 9,000 interest income after TDS of 10%, total amount before making TDS, how we can find out the gross amount? Formula for finding the gross amount is net amount received into 100 divided by 100 minus rate of TDS. So amount received in this case is 9,000 into 100 divided by 100 minus TDS is 10%. So 9,000 into 100 divided by 90, that is 10,000. So gross amount of interest is 10,000. Amount received is 9,000. But the gross amount of interest is 10,000. Hope that is clear. Now, these are the rules regarding grossing up of interest on securities. In case of tax-free commercial securities, interest is grossed up always. Okay, in case of tax-free commercial securities, interest is grossed up always. In case of less tax commercial securities, there are two situations. Situation number 1, if interest received is given, then it is to be grossed up. Okay. Second situation, if rate of interest and amount of investment is given, then no need to be grossed up. If interest received is given, it is to be grossed up. If rate of interest and amount of investment is given, no need to be grossed up. Then, in case of government securities, interest is not grossed up. Then, grossing up of income from lottery, crossword puzzles, etc. Winnings from lottery, crossword puzzles, card games, other games, gambling or betting, when exceed rupees 10,000, it is subject to 30% TDS. Winnings from races exceeding rupees 5,000 is also subject to TDS, that is 30%. Okay, let us read this example. If a person wins a lottery and net amount received, that means after TDS, by the assessee would be rupees 1,40,000. So we have to find what is the actual amount of winnings from lottery. So we have to gross up. Formula is net amount received into 100 divided by rate of TDS. Amount received is 1,40,000 into 100 divided by 100 minus, in this case TDS rate is 30%. So 1,40,000 into 100 divided by 70, rupees 2 lakh. So total amount of winnings from lottery is rupees 2 lakh. Hope that is clear. So there are certain points to remember. Winnings from lottery and crossword puzzles. If in the question winnings from lottery and crossword puzzles are given, no need to gross up because TDS is not deducted from that amount. If winnings from lottery and crossword puzzles are directly given, no need to be grossed up. But if when the amount received is given, amount received means after TDS, if that figure is given, the figure must be grossed up. Hope that you understood today's session. It will be more clear when we do problems under the module income from other sources. Okay, thank you.